money savvy friends, welcome back to Clear Direction for Retirement with Wootton Financial Group, where we break down big financial news so you can win with your wallet. Today we are diving into something that just dropped on July 4th of this year. And no, it's not fireworks. It's the brand new One Big Beautiful Bill Act, or as we're calling it, the OBBBA. Yeah, that's a mouthful, but trust me, what's in it could affect your paycheck, your taxes, your business, and even your kids' future. So before I jump in, as usual, you'll also see these come up at the beginning, possibly the end of the video, but this is not to be considered personal financial advice or tax advice. We do not do or give legal or tax advice, but we do deal with some planning that revolves around taxes and so forth. So we like to stay abreast of these things, as we certainly do this with clients in our firm. And so we'll dive in and look at a few of these, but make sure that you check with your tax advisor, your CPA, in terms of how these might affect you directly, or call us if you'd like to get clear direction for your retirement, and we can help you take a look at this in terms of your personal situation. So anyways, the law was signed into law, or the act was signed into law by President Trump. It's kind of a mix of permanent tax extensions, brand new deductions, cool perks for families and business owners. So whether you work 9 to 5, or you run your own business, or you're saving for your kids' college, there's something here for everyone. So let's dig into some juicy details, and don't worry, I'll keep the IRS lingo fun to the extent that I can. So what about general tax rates? Well, if you remember, the 2017 Trump tax cuts dropped the rates down to 10, 12, 22, all the way up through 37% in the brackets. And the OBBBA makes those brackets permanent. So, yep, no more expiration worries, at least until the next change in the White House or Congress tries to do so. So, also the AMT, that pesky little alternative minimum tax that applies to a few of you out there, depending on the type of income you have, those exemption levels are locked in for good as well. And so that's a pretty positive thing also. There was also a deductions bonanza within the bill itself. And so in terms of then versus now, things like your standard deduction, that's the thing that most people are probably the most familiar with. It jumped to $15,750 for individuals and $31,500 for couples, unless you're over 65, which we'll get to that in just a second. Personal exemptions, those are still gone. Sorry, folks, but they did throw in some other stuff like bonus deductions for seniors. So if you are over the age of 65, from 2025 through 2028, you're going to get an extra $6,000 deduction per person, in addition to the standard deduction, and also in addition to the standard deduction plus the normal over age 65 or blind addition that they add to the married filing joint standard deduction. So a lot of extras, if you will, unfortunately, for a limited period of time. The SALT deduction, state and local taxes, that's been temporarily boosted to $40,000 for those of us that may be, non-millionaires, meaning it would be available to you, but that's again only through 2029. There's also some additional charitable perks, and this is kind of interesting. Normally with charitable contributions, you would have to itemize, and of course there's caps on percentage above AGI, those types of things. But even if you don't itemize, the bill allows for still writing off up to $2,000 of donations starting in 2026. So you could think of that as an additional $2,000, if you will, of standard deduction. So especially for people that are over 65, the deductions have increased substantially. And so that's going to be a real positive, if you will, in terms of kind of coordinating taxes with how and where you're pulling income from, those types of things. So it was one of the things that the Senate changed in the bill. Obviously, Trump wanted no tax on Social Security. That didn't happen, but what they did was give a temporary reprieve in terms of increasing a lot of the deductions. The bigger deductions tend to apply to people that are 65 and older, But the charitable aspect of it applies to anyone. So that deduction, you can still write off up to $2,000 in charitable, even if you're not itemized. So what about no tax on tips and overtime? That was a big one that was talked about coming into trying to get the legislation passed. They were able to do no tax on tips, but they put a cap up to $25,000 in tips and $12,500 in overtime income. Those are temporarily tax-free from 2025 to 2028. Again, so, servers and hustlers rejoice. Those are some good things to put in there. But one thing to note, just to give an example, don't think that all of your overtime is tax-free. Meaning, let's say your pay rate is $15 an hour, for the sake of a simple example, and that your overtime rate is $16.50. Okay. Only the additional $1.50 per hour that's above your regular 40-hour week is going to basically be exempt. So that additional rate that represents your overtime rate over and above your base rate is basically what's basically tax-free. And again, they do have caps. So there is a little bit of a nuance there. Make sure and talk to your tax advisor about that. So what are some new and temporary perks? Well, if you're buying a car, you can now deduct up to $10,000 in loan interest if it's built here in the U.S., meaning if the vehicle is manufactured here, for the most part, then the loan interest would obviously be available for deduction. And that's for people that itemize or non-itemizers, those that take the standard. So the mortgage interest deduction cap of $750,000, that's now kind of set in stone. So that was something that came through as well. But hold up, not everything is a giveaway. There are some itemized deductions that are still gone. So for example, moving expenses, unless you're military and some other miscellaneous things, some of those itemized deduction type things are still gone, meaning they haven't brought any of them back. So make sure that you read the fine print or talk with your CPA or tax advisor in returns to what may be applicable to you. Is itemizing better or is taking the standard better, right? Those are things that you want in terms of tax planning to be looking at. We certainly look at those things with clients that come into our office. So in terms of like tax credits, family type goodies, quite a few things in here as well. The child tax credit is now $2,200 and it will be indexed for inflation forever. There's also, starting in 2027, I believe, a scholarship credit. This would be like if your school offers, let's say your kid goes to a school that offers a scholarship, or there are scholarship organizations that you would like to give to, you can get up to a $1,700 credit back, dollar for dollar at that, by donating to those types of scholarship programs. If you are a clean energy person, meaning trying to take advantage of the clean energy credits, unfortunately they're out. So KISS solar and EV credits, goodbye after 2025. Those are no longer going to be available. So what about businesses, right? If you're a small business, if you're an entrepreneur out there, the bill hooks you up in a few different ways. And certainly everything I'm going through is not exhaustive, right? I mean, it's a pretty big bill, but I'm basically trying to hit the highlights of what would be applicable to most folks. So if you're an entrepreneur, small business owner, the qualified business income deduction, that's a 20% cut, and they've made that permanent, okay? Also bonus depreciation, it's back and it's permanent, right off the assets that you purchase to build your business. Those can be accelerated in terms of depreciation, if you will, and you can write off those assets at 100%. Again, make sure you're checking with your tax professionals in that regard. Small business expensing, there is a cap, but it's been increased to $2.5 million, and that's huge if you're reinvesting in your company and trying to grow and scale. So there's also, if you just earn, let's say you're a minimum hustler. Well, minimum hustle equals minimum reward, right? But even if you just earn $1,000 from a business, you're guaranteed now to get a $400 deduction. So those kind of nuances, I mean, for somebody, let's say, that's just trying to get off the ground with maybe a side hustle or something, a little bit, but it's something to consider, and it may be there for you. So you might want to check on that and just make sure it's included when you get ready to go file, okay? What about investments and accounts of that type? You know, growing your money. So let's talk about that. They have basically brought in some changes for what we call QOZs. These are the opportunity zones that you may have heard about during Trump's first administration. The biggest changes are that the 10-year clock is currently ticking for current zones, meaning the ones that came about under Trump's first administration. The new ones are coming in 2027, okay? And so these rural zones, these investment zones that you can invest in, they can get up to a 30% capital gain reduction. So that can be important tax planning, you know, if it makes sense for your situation. That is situationally dependent. But certainly there are some tax advantages there. The other thing to consider is that, if I'm not mistaken, I think these opportunity zone investments, you have to hold them at least 10 years to make sure that you get the discount in terms of the tax reductions we're talking about. So just make sure you're up to speed with that. Qualified small business stock, QSBS. Now you can exclude 100% of capital gains after 5 years. Up to 50%, right? So they've also raised the limits in terms of what that look like. But if you're a small business, in terms of a business that's oriented around a stock design, then certainly that would apply to you as well. 529 plans and ABLE accounts. These are, you know, more ways that you can spend for school or disability expenses. You can now roll 529s into ABLE accounts tax-free. That can be a big deal for a lot of people. So also they've introduced something called Trump accounts, right? So these are brand new. Babies that are born between December 31st of 24 and January 1st of 29 are going to get $1,000 free, if you will, from Uncle Sam, and then parents can contribute up to $5,000 a year, and it grows tax deferred. So think of it like an IRA for your toddler. Is that the best thing for you to do? Well, you know, that can be debated depending on your situation, but it's free money from Uncle Sam, and it's a way to get things started from a saving perspective for your kiddos, okay? So all that being said, I hope this information's been helpful to you. I mean, the One Big Beautiful Bill, like I said, is really large, okay? And there's a lot of stuff in the bill, and I've tried to basically wrap up in under 8 minutes whether or not it applies to you, or maybe the most important sections that are going to apply to more people than not. So whether you're saving for your kid's future, or you're running a side hustle, or you're just trying to keep more in your paycheck, this bill could change the way that you file for taxes for years to come. So you need to make sure you're on top of it. Remember, this is not tax advice. Talk to your professional, but at least you've got the knowledge to ask the right questions, and I hope it's helpful to you. If you have found this video helpful, give it a thumbs up, subscribe for more financial breakdowns and topics. We're going to be trying to post a lot more to our social media pages and content. And then tell us in the comments what you thought about it. What part of the OBBBA are you most excited about? Until next time, keep your money smart and your questions smarter. I'm Chris Wootton, Wootton Financial Group. We want to give you clear direction for retirement. Have a great day, guys.